Let me ask you something. When was the last time you actually used cash? Not tapped your phone, not swiped a card, but real paper money. For a lot of people, it's starting to feel rare, almost outdated. And that raises a big question. Is cash slowly disappearing, or are we just being pushed to think that way? In this video, I want to talk to you honestly about whether cash is really going to die soon, what's actually changing behind the scenes, and what this shift could mean for everyday people like us, not just banks or governments. Before we get into it, if you enjoyed calm, real conversations about money and the future, make sure to like this video, subscribe to the channel, and turn on the bell so you don't miss what's coming next. Digital payments are taking over fast. Take a good look around you. Digital payments are everywhere, and their growth is accelerating faster than almost anyone predicted. In some countries, the shift is staggering. Take Sweden, for example. Only about 10% of transactions are done with cash anymore. People there can go weeks without ever touching a bill or coin. Even small street vendors and local shops, which traditionally relied on cash, now accept cards and mobile payments. The convenience is universal, and cash is becoming the exception rather than the rule. China has taken it even further with platforms like Alipay and WeChat Pay. There, you can pay for street food, taxes, shopping, and even tip street performers entirely through your phone. No physical wallet is needed. The adoption is so widespread that digital payments are often faster, safer, and more convenient than handling cash. And this transformation isn't limited to wealthy urban centers. Developing nations are also embracing mobile payments, often skipping the whole credit card phase entirely. Kenya's M-Pesa system is a perfect example. People can send and receive money with even a basic mobile phone, without needing a bank account. What's happening here is a global financial revolution, and it's unfolding right before our eyes. The pace of change is rapid, and it's reshaping how people handle money across the world, from small villages to megacities. Banks and governments are pushing digital money. Here's something most people don't really talk about. Banks and governments actually want you to use less cash, and they have very clear reasons for it. For banks, cash is expensive to handle. They have to print bills, transport them in armored trucks, maintain ATMs, and deal with counterfeit money. Every cash transaction has a cost attached to it. Digital payments, on the other hand, are cheaper, faster, and much easier to manage. It's a clear financial incentive for them to encourage card payments, mobile wallets, and other digital methods. Governments have their own motivations too. When every transaction is digital, it's much easier for them to track money flows, enforce taxes, and detect illegal activity. Cash, by contrast, is almost impossible to monitor comprehensively. That's why countries like India took drastic measures by suddenly demonetizing large bills, forcing people toward digital payments and attempting to crack down on corruption. Some countries are going even further. Sweden's central bank, for example, is experimenting with an e-krona, a form of government-issued digital cash. Unlike cryptocurrencies, this is official money, fully backed by the state. Other governments are observing these experiments closely and considering similar initiatives. But cash isn't going down without a fight. Now, before you go thinking cash is dead, here's the reality check. Cash is still incredibly important, and it's not disappearing anytime soon. Consider the millions of people who don't have smartphones, bank accounts, or reliable internet access. Elderly individuals who never adapted to digital payments, or residents of rural areas with spotty connectivity, often rely on cash simply because it's the only option available to them. Then there's the privacy factor. Every digital transaction leaves a data trail. Someone somewhere can see what you bought, where you were, and when you spent money. Cash transactions, on the other hand, are completely private. No tracking, no data collection, no permanent record. For people who value anonymity, cash remains irreplaceable. Reliability is another key point. What happens when the power goes out, the internet crashes, or payment systems fail? Cash works every time, without any technology needed. During natural disasters or emergencies, cash often becomes the most dependable form of payment because digital systems can fail unexpectedly. And let's be honest, some people just prefer cash. There's something tangible about handing over physical money that makes spending real. Many find it easier to budget and control their expenses when they can physically see and feel the money leaving their hands. Old habits die hard, and cash is one of the oldest, most ingrained habits we have. So while digital payments are convenient and growing, cash isn't going anywhere. The future will be a hybrid system, where digital dominates day-to-day transactions, but cash remains an essential safety net, privacy tool, and backup when technology fails. Being aware of both sides and preparing for them is the smartest way to navigate the changing financial landscape. The hybrid future we're actually heading toward. So let's dive even deeper into what this means for the future of money and how it will affect you personally. While cash won't disappear completely, its role in daily life is steadily shrinking. In most developed countries, people are already using cards, mobile wallets, and apps for the majority of transactions. Coffee, groceries, ride shares, even tips. The convenience is undeniable. You don't have to carry coins or bills. Transactions are faster, and digital records make tracking spending easier. At the same time, cash will remain a backup, a safety net, and a tool for privacy. Some situations will still require it: street vendors, small local markets, or emergencies where digital systems are down. Think of cash as insurance. You hope you don't need it often, but when you do, it's invaluable. The way businesses respond will also accelerate the shift. Many will design systems to incentivize digital payments, offering loyalty points, small discounts, or even faster service to customers who pay electronically. Conversely, some may charge small surcharges for cash to encourage digital adoption. These changes will make using cash feel increasingly inconvenient, nudging more people to go digital almost automatically. Internationally, the pace of adoption will vary dramatically. In countries like Sweden, cash usage has already dropped to single-digit percentages, while in parts of Africa or South America, physical currency is still widely used. Your local culture, regulations, and technology infrastructure will dictate how quickly you adjust. For individuals, this hybrid future also means new responsibilities and skills. You'll need to be aware of cybersecurity risks, understand digital payment tools, and manage your money in a mostly digital environment. At the same time, maintaining a small cash reserve will be smart, not outdated, especially in emergencies. In the end, the shift is not just about convenience, it's about control, efficiency, and flexibility. Digital payments will dominate because they simplify life, track spending, and integrate with broader financial tools. Cash won't vanish, but it will become the exception rather than the rule. Gradually, almost without noticing, your wallet will carry less cash. Your phone or card will handle most payments, and this hybrid system will feel completely natural. By preparing for it now, you'll navigate this transition smoothly and take full advantage of the benefits digital payments bring. What this means for you right now. So what should you actually do with this shift toward digital payments? First, get comfortable with the technology if you aren't already. Learn how to use mobile banking apps, payment platforms, and digital wallets. You don't need to abandon cash entirely, but being digitally fluent gives you more flexibility and options in everyday life. Second, prioritize security. Digital payments are generally safe, but you still need to protect yourself. Use strong, unique passwords for each account. Enable two-factor authentication wherever possible, and monitor your accounts regularly. Avoid clicking on suspicious links or responding to unexpected payment requests. Third, keep some cash on hand for emergencies. You don't need a huge stash, just enough to cover a day or two if digital systems go down. It's a simple precaution that ensures you're never completely stranded. Finally, think about your privacy. Read the terms and conditions of the apps you use and understand what data is being collected and shared. Some transactions might be fine digitally, but others you may prefer to do in cash to maintain anonymity. When you really think about it, this isn't just a money question. It's about control, privacy, and choice. Cash isn't just paper. It represents freedom in a way digital payments don't always replace. Whether it fades away or sticks around, what matters is understanding what we gain and what we might lose along the way. I want to hear from you. Do you still prefer using cash, or have you already gone almost fully digital without even realizing it? Share your thoughts in the comments. I genuinely read them and enjoy the discussion. If this video made you pause and think, don't forget to like, subscribe, and share it with someone who's also wondering where money is headed. Thanks for spending your time with me, and I'll see you in the next one.